For now, the market is sort of seesawing between red and green. So it's getting back into the green line right now. But as you can see, it's lost all of its gains, the early morning gains. And the reasons for that, plenty of stocks under pressure. Federal Bank is now down over 3% post the numbers. Dish TV, Yes Bank, Bank of Baroda and Union Bank are a couple of other stocks that are in the red right now. But let's talk about Jet Airways. It's trading well in the red. Sources suggest that the lenders consortium is broadly in agreement on the debt restructuring plan, and the banks are now open to Jet Airways bringing in the Tata Group if talks materialize. Ritu Singh joins in to give us the latest developments. Ritu, over to you.
Well, today we heard from State Bank of India that released a very concise statement mentioning the fact that a resolution plan was underway for Jet Airways, and however, the plan is yet to be crystallized and would have to be approved by the boards of all the lenders along with Jet Airways, and will be under the ambit of RBI and SEBI regulations as well as the Ministry of Civil Aviation regulations on foreign shareholding. Now, as we've been reporting, a resolution plan is in the works. This was also discussed in the lenders meeting yesterday as well, where we understand that about 800 to 1,000 crore of Jet Airways 8,000 crore rupee debt will be converted into equity by the lenders. In addition, we understand that Naresh Goyal has communicated this to the lenders, that he is agreeable with his stake falling to below 26% if it comes to that after the restructuring is completed. Also, we understand that any restructuring will only be done once there's also some equity or cash infusion into the company, whether it comes from Etihad Airways or it comes from a financial investor or even Tata Sons for that matter, which also lenders are open to. But there has to be some funds on the table for this restructuring to succeed. And lastly, on what we had reported yesterday on Etihad offering to invest only at 150 rupees per share, that is something that we understand that lenders are not willing to be bulldozed into. They've made it very clear that any fresh infusion will be as per SEBI's ICDR regulations and at the fair pricing formula as per RBI's Feb 12 circular, and not be any arbitrary number quoted by any of the stakeholders. Broadly, these are the contours being discussed, and lenders are very clear that the situation is not as dire as it is being made out to be, and there's no imminent risk of Jet Airways grounding its aircrafts, as was suggested by Etihad in its letter to SBI.
We have issued a statement, as you have seen. This was done only because there was all kinds of intense speculation going on. As long as we are compliant, what we are saying is that whatever regulatory prescriptions are in vogue will be complied with. If there are anything which requires a clarification or vetting by SEBI or RBI or any agency, that will also be obtained.
All right, so that's the clarification coming in from the lead lender of Jet Airways, State Bank of India, and lenders clearly not succumbing to any of the pressures put in by Etihad Airways. All right, let's move on to Motilal Oswal, and that particular stock has slumped in trade today, down over 5% on the back of a weak set of Q3 numbers, and the revenues came in below 15% on a YY basis, with really stress seen in all the verticals of the operations. And Abhishek Kothari is right here to put all that into perspective. Abhishek.
Well, Nisha, the revenue is down about 15% YOY and close to 18% on a sequential basis. If you look at the PBT, that is profit before tax, that's down by 93% YOY and about 19% quarter on quarter. So what led to the slump in PBT is the housing portfolio vertical. Over there, the PBT loss is now at 299 crores over the last 4 quarters. And this quarter, the PBT loss was at 149 crores, the highest ever over the last 4 quarters. The stress is seen all across the verticals that Motilal Oswal operates, barring the fact that AMC business, that is the asset management business, which is doing well. There is also a governance issue because notes to account contained a fact that associated numbers have not been audited. But if you look at the overall profit, they add substantial, percentage or substantial share to the net profit on a consolidated basis for Motilal Oswal. Back to you.
Okay, in fact, we did reach out to Ramdev Agarwal. We spoke to him here in the studio, the co-founder of Motilal Oswal. And here's what he had to say on the company's Q3 performance and, more importantly, the issues with Aspire.
Company has 2 parts. One is the capital markets and second is the home finance. So home finance is still work in progress. But my sense is that we are over the hump in terms of recognizing whatever the legacy, kind of problems were there in the book, which got created because of the rapid growth in first 3 years, and last 1 year, 1.5 years, we have been able to clean up most of it. I mean, now operationally, whatever comes incrementally in the quarter or quarter after, there's nothing legacy left to be recognized. But 1920 should be, say, let's give March again, some kind of a subdued number. But 1920 should be a reasonably good number, I would say.
All right, Motilal Oswal there reacting to the earnings. Another stock which is in focus and really reacting adversely to the numbers is Federal Bank. Just half an hour back, the results were announced. And take a look at that particular count. A sharp knock is seen, over 4% down. And that is a reaction to the results really coming in. And it is clearly a mixed bag of numbers for Q3 numbers in line with the estimates. And let's take it straight to Abhishek to get more analysis on that. Abhishek, any reason why the stock has adversely reacted?
The numbers are not that all good, despite the fact that balance sheet growth remains strong, but it is not healthy. So if you look at the loan growth, that has come in at 24.6% with a deposit growth of 28% on a YOY basis. However, on the flip side, the slippages remain elevated. That has come in at 435 crore. That compares to 477 crores in the previous quarter. However, the typical range for slippages for Federal Bank has been at and around 300-350 crores. So this remains elevated. Another good point that they mentioned is that there is no regulatory divergence in their asset portfolio. On the flip side, you look at the operating profit that grew by just 1.5% on a sequential basis. This is on the back of the fact that employee expenses increased by 14.5% on a sequential basis. So cost to income ratio, which is an operating efficiency parameter to check how efficient a bank is in terms of its operating metrics, is at 50.3 versus 48.2% quarter on quarter. So provisions were down 34% on a sequential basis, despite the fact that slippages remain elevated. So lower provisions actually aided the profit, which has not gone down well with the investors. Back to you.
Okay, thanks a lot for that, Abhishek. Well, that's a Federal Bank at the low point of trade right now.
And as we count down to the CNBC TV 18 India Business Leaders Award, Page Industries is the contender for the title of Outstanding Company of the Year. Page Industries is arguably one of the biggest wealth creators on Dalal Street. In 2018, the price of its stock crossed 36,000 rupees, and that's 100 times its 2007 listing price. CNBC TV 18's Mangla Malu reveals the secret mantra that has this innerwear manufacturer in the reckoning for this title.
Bet on the jockey, not on the horse. That's a common phrase you hear at the tracks. And for Page Industries, this has proven true quite literally. August 2018 was a seminal moment for the company, which manufactures and distributes innerwear in India for American brand Jockey International. And with business galloping, so too has the stock price. At a high above 36,300 rupees, the stock was trading at over 100 times its issue price of 360 rupees per share, making it one of the biggest wealth creators out there. The achievement was no accident. It is the result of a consistent strategy that focuses on improving the product mix in categories like women's wear and active wear and strengthening its distribution chain. These efforts have resulted in its return on capital employed crossing 64% when the industry average has been 28%. Plans are underway to increase the number of exclusive brand outlets to over 1,000 by end of FY20 from the current 470. And with the company having backed a 10-year extension to its license agreement with Jockey International, this expansion plan is expected to stretch further, not to mention giving it an edge over competitors like Rupa and Lux Industries. But given its net profits far outpace that of its peers and its revenue growth guidance of 20% for the next 20 years, it's not surprising Page Industries likes to say, "Our biggest competition is ourselves." All this makes Page Industries a contender for the title of the Outstanding Company of the Year at the CNBC TV 18 India Business Leader Awards 2018.
Okay, all roads lead to the India Business Leader Awards later tonight. And of course, it's going to be an exciting night, right? So many corporates and so many big leaders from India Inc.,
yes,
along with a lot of politicians as well.
Yes, and you'll find Sonia presenting that award as well. So look forward to that. And with that, it's a wrap on Business Lunch. But stay tuned to CNBC TV 18.